Welcome back, dear traders. The long weekend is over and today Wall Street is opening on a cautious note. The overall pessimism comes from China, but market sentiment might improve thanks to corporate reports. Yesterday, US markets were shut for Martin Luther King Day, and the major stock indexes opened with minor losses. Futures on the benchmark stock indexes slipped in the pre-market, signaling sluggish trading in the early New York session. The S&P 500 is expected to trade in the intraday corridor between 3,940 and 4,020 points. On Tuesday, global stock markets traded with a cautious pessimism. The news from China dampened the risk-on mood. So China's GDP expanded by 2.9% in the fourth quarter, much weaker than the official target rate of 5.5%. China's economy grew by 2.2% in 2020. It was the worst reading in almost half of a century. The tepid economic growth in China discouraged traders and dampened their risk appetite. Chinese shares traded on the US exchanges such as Alibaba, JD.com and Baidu dumped by more than 2.5% intraday. Futures on the Wall Street indexes turned down, suggesting the weak New York session. Investors might welcome such corporate reports, which could also underpin the stock indexes. Top US banks such as Goldman Sachs and Morgan Stanley are due to reports on their quarterly results. Goldman Sachs has already unveiled a 69% slump in profits in the fourth quarter due to heavy losses in consumer lending. As a result, the bank's shares stumbled by 2.5% in the pre-market. Last week, JP Morgan Chase and the Bank of America beat the forecast of their quarterly profits. At the same time, revenues of Wells Fargo and Citigroup fell short of expectations because large Wall Street lenders accumulated funds for a rainy day in the face of a looming recession. Morgan Stanley will present its records later today. According to Refinitiv, revenues of companies from the S&P are expected to drop by 2.2% on a year in the fourth quarter. Following a sharp fall in 2022, markets opened higher this year because fresh evidence of easing inflation and moderate growth in the wages reinforced expectations that the US Fed would soften the pace of rate hikes. Nevertheless, Wall Street is trading under pressure as investors are hesitating to open large bets due to the fears of a slowdown in the global economy, high inflation, tight financial conditions, and the market volatility. Today, the stock indexes could find support from rising oil prices and the rally in the energy sector. High-tech giants such as Apple and Tesla are also regaining their footing. Microsoft has lost 1.8% despite the decent news. While the US stock market is absorbing corporate reports, the US dollar index is printing lower lows. Its index opened the year with a decline. It tried to recoup losses but reversed downwards in the early American session. The US dollar index is trading at about 102.12 within the intraday corridor between 101.70 and 102.40. Investors are alert to the Bank of Japan's policy meeting. Meanwhile, the European currencies are responding to the European Union inflation data. The US dollar looks gloomy compared to the G10 currencies. The greenback was discouraged by fresh macroeconomic data from the United States. The New York Empire State Manufacturing PMI plummeted to minus 32.9 in January from minus 11.2 in December, and analysts had projected a climb to minus 8.7. The red heat reading has been the lowest since May 2020 and the fifth worst contraction in business activity in the state of New York. Investors found out about the halt in the hiring and the contraction in the business week's duration. This is a good omen for the Fed, which aims to cool down the labor market. On the other hand, the report is bad for the US dollar because it proves efficiency of the Fed's monetary policy and signals the Fed's softer agenda. The Canadian dollar lost ground intraday and rebounded afterwards. The USD card pair showed a 0.05% downtick and inched down to 1.3412 before the New York trade and the publication of Canada's inflation data. The currency pair is likely to trade in the intraday Canada between 1.3380 and 1.3460. Canada's inflation report will serve as a market catalyst for the loonie today. With a fresh CPI, investors will try to puzzle out a further policy move of the Bank of Canada. The annual rate of inflation in Canada skidded to 6.3% in December, the lowest score since February 2020, and below the consensus of a 6.4% growth. A decline in airfare costs, oil and accommodation prices pushed down inflationary pressure. Canada's CPI fell by 0.6% on months, the highest reading since April 2020. And the Bank of Canada increased the key interest rate to 4.25% in December, to the highest level since 2008. Nevertheless, the central bank noted that it would decide on a further rate hikes in terms of scaling down the pace of monetary tightening or completing the cycle of rate hikes. The loonie might find support from rising oil prices, and Brent futures rose by 69 cents or 1.2%. to trade at $85.52 a barrel. WTI added 1.6%. Meanwhile, Bitcoin is conquering previous peaks. The token approached the level of 21,200 but failed to surpass it. Bitcoin is hovering at around $21,100. Altcoins are trading mixed. Following a year-long bearish market, cryptocurrencies are regaining heavy losses. As investors rely on positive fundamentals, they are shifting focus back to risky assets. Bitcoin and other popular tokens commonly take the lead, so we are watching a rapid rally in the crypto market. According to blockchain.com, the value of bitcoins traded on a major exchanges surged to $251 million in the last 7 days. It's the biggest value in the last 2 months. And China Analysis estimates that the overall volume of bitcoins used for trading and payments increased on average by 13,230 tokens in the last 7 days. Nevertheless, it's too early to celebrate the bullish trend. The trading volume remains low amid an uncertain macroeconomic situation. Any bad news might push the crypto market back into pessimism. As for the Bitcoin outlook, there are 3 scenarios for today. If the token settles above $21,200, it will aim to conquer $21,500 in confidence. Otherwise, the crypto could get stuck sideways between $21,000 and $21,200. The worst-case scenario is a decline to $20,800 in case of a bad news on the crypto industry. Keep close tabs on the financial markets on the InstaForex TV channel. See you online tomorrow.